What is up, everybody? I am back with a review. We're back to doing reviews. Sorry it's been so long since the last one. I had a very chaotic week of I've given I gave up nicotine. I'm still not 100% on that, but just had a lot going on this last week. So kind of figuring out some work ultimatums and all that kind of stuff as well. So regardless, I hope to make these a bit more regular moving forward. So one thing I'm actually going to do differently is you can obviously see that I'm using Webull now. I am so close to PDT. For those of you who aren't familiar, which is I presume most, so I trade for a firm, right, a proprietary trading firm, and that money is traded with their account, and I get a split of it at the end of every month. Now, at the same time, I've been trading my own personal account that I funded with $2,000 in the end of January, and it is now. I was using a brokerage called Capital Market Elite Group, which is in Trinidad and Tobago. Excuse me. And you can get unlimited day trades, even under PDT, and leverage, which is the big thing. Those two together, basically, you can day trade regardless of how much money you have. The same way you could with $1 million account, right? And the big drawback is that you pay like a monthly fee, execution platform fee. You pay commissions per buy and per sell. So I mean, sometimes I'd be paying $20 a trade between fees and commissions and all that stuff, especially if I did descending bids and what have you. So it is an uphill battle for sure. But I got my account up quite a bit, and now we're getting close to PDT. So I figured I'd do the rest of the way in cash. And one big thing with cash accounts is that you obviously not only do you not have the leverage that I was afforded with the other brokerage, but you also, you because it's not margin, you only get like if you spend $1,000, you can no longer spend that $1,000 for the rest of the day, right? As opposed to spending $5,000, buying a stock for $5,000, selling it for $5,000, you immediately are credited back your $5,000. Cash accounts, that's not the case. So let's say, for instance, is a $10 stock. I wanted to buy 100 shares of it. That's $1,000 of my however much account, and I don't see that $1,000 back until two trading days later, 2 days of settlement. Now, the big issue with that, though, is that there's a couple of bad habits that get formed as a result of cash accounts. And one is sometimes holding a winner for too long because you're like, well, I got one chance at this, so I have to, if I don't hold on to the winner and squeeze every little dollar out of it I can get, then I'm not going to be able to use this money for the rest of the day. So I need to hit, and I need to hit hard, and I need to squeeze it for everything it's worth. And oftentimes you end up either giving back profit or turning a winner into a loser, things like that. Another thing is sizing. It makes it hard in the future to adjust your sizing because you're so used to either, typically the way people do cash accounts are you either trade like 5-10 shares a bid, and you take very small winners, small losers, or you use half of your account on a single trade, and you got basically 1 or 2 trades on the day you can make. And the issue with that is that if it's just a trade, if your strategy is a 60% win rate strategy, which is good, you can't afford to take 10 trades so that average comes out, right? You might end up getting, of those 4 losers you're guaranteed every 10 or whatever, you might take 3 of those in a row, right? And on a cash account, you can't afford to do that because you just lose that money for the day. So anyways, now that all that has been spoken, what is my solution, right? What do I do to what do I do to get around that? I'll show you. So what I primarily do is I'll trade options. So here are my options, and it works just like everything else. So I'm gonna kind of explain my option scalping process the same way that I would explain my 2-5-10 strategy. If you're not familiar with that, go watch that video. It was one of the first ones on my playlist. But essentially, it works the exact same way. So let's say here on FUV, which is an EV ticker, I want to do assess a zone here. Oops. Why is my hotkey's not working? Whack. Anyways, let's assume that I wanted to assess a zone here. I wanted to assess a zone here, right? So this is my zone. And let's draw our rectangle, just like we always would. Let's say our stop loss is down here, profit target. The break of that would be pretty instrumental, but yeah, we'll make our first profit target up here. Maybe a second one up here. You know, so that trade would look just like, you know, this is what it looks like when you when I do my 5-10 strategy all the time, right? It always looks like this. You know, this is the exact same strategy I use for all of my trades, right? If you're familiar with, you know, my trading, you're familiar with the strategy. So let's say that price comes down to fill a zone I've decided. Typically what I would do is have my descending bids, which is great. But in this case, what I do is I will have my options contracts open. So let's say that there's $10 or 50-cent contracts, $10 contracts, $11 contracts, you know, the usual calls. So price dips down into my zone, and I'll buy one contract, one FUV contract, weeklies, usually whatever is the shortest time frame. Sometimes they're dailies depending on the ticker, but they're almost always weeklies for you know, a lot of these smaller companies. So it'll come dip into my zone, and I'll buy, instead of a bid at the top, I'll buy one contract. As it comes down, I'll buy, you know, another contract, maybe 2 or 3 contracts at the bottom of my zone, right? And I'll keep dropping that price as I watch the bid and the ask on the option chain. As I watch them, wonder if I can, yeah, here, let me show you. So right here on the option chain, we would do calls, FUV. Okay, so $10 calls, right? So as it's backpedaling its price, you know, the bid would drop to, you know, 70 by 80 or 60 by 70 or something to that effect. And I will, you know, buy up these contracts as price dips into my zone. You know, accumulating contracts the same way I would if it was shares. And you know, down here I would have my stop. So how does this work then? So in this case, if price came against me and it came down to stop me out, I would just, you know, sell my start scaling out of my contracts. I typically, like, as soon as options contracts start to come against me, will start unwinding them, because options can unravel really quickly, and options don't always have to match the technical analysis. Sometimes people can speculate and anticipate what they think is going to happen on the you know, so like the bid and the ask will sometimes drop or jump even though price isn't moving, just based on what people think is going to happen next, which is essentially the same thing as what's happening on a chart. It's just, you know, presented to you in a little bit different mechanism here. The information is just presented a little differently. But regardless, so let's say I bought these, you know, I got 5 contracts right here. My average is probably, you know, whatever that would relate to this, but generally speaking, the majority of my contracts are in the middle to the bottom of my zone, just like if they were bids for shares. And if it starts to come against me, I can just sell them. I sell them all. Generally I have a stop loss, just like I would with shares, where I would get stopped out. And if I have contracts left after unwinding them, by the time I get my stop loss, I will market sell them and I admit my loss. Because depending on how many contracts you buy, you can be down substantially. Certain stocks as well only let you do increments of 0.05, 5 cents, $5. So like this one, FUV is actually a good example of that. So I could only sell at either 95, 85, or 90, right? I can't do like 92 or whatever. So sometimes price drops or increases dramatically. So you just have to be more mindful of that. Now, options are extremely dicey when it comes to, just them as a mechanism. They are very, very complex. If you're not familiar with them, then I would please don't on my account go and start trying to do this, because they are a different beast, right? Now, I don't pay much attention to the Greeks, IVs, anything like that, because what happens is I buy my contracts, price starts to come up towards my profit target, and I'll start scaling, take a contract or two off the table, because as price stagnates up here, the price of the options will drop. So even though price has gone up for my entry, the options, as people buy and sell, they'll figure out what they're willing to pay in this area. So as soon as price makes a move to the upside, it usually jumps dramatically. The option usually jumps in value dramatically. And then as it starts to slow down, that value ends up dropping. So sometimes this move right here can make your options worth more than they will be up here, just because the anticipation has people willing to pay more because they think it's the potential upside is significant. So you have to be fast. Profit targets, I usually consider those like I want to be scaled out by then, or I want to be out, like, let's say right here, let's say I have 10 contracts, I want to be at least out of 5 right here, and then watching to get rid of the rest. So it works a little different than I would with shares. Obviously, I would hold my shares because their value doesn't decrease or increase. If it goes up from my entry, I make money. If it goes down from my entry, I lose money. Well, options work a little differently in the sense that sometimes they can go up and you don't gain the same value, and sometimes they can go down and you lose more value than you would. So it's something that you definitely, if you want to try, you need to do very light, cheap tickers, one contract at a time, stuff like that. Get familiar. Watch a video on just what the basics of options are. Because this option scalping mechanism is really, really profitable for cash accounts, right? So this is the whole reason I moved to cash, and I was okay with that, is because I figured I could just make the rest of the PDT with my options. And the reason for that is simple. Because options, they settle overnight. So any money that let's say I have 20 grand in this account, and I spend all 20 grand, buying and selling options all day. The next day, I have all my 20 grand back, because it's not subject to the same settlement period that equities like shares would actually be subject to. So you get your money back the very next day. Also, the next big thing is that you can get huge returns for little money. So let's say, for instance, I bought one contract for $50. Let's assume this was at 0.5. One contract for $50. And then it goes up to where it's at now, where it's worth $90. I sell that. So for a $50 investment, I just made $40 in profit, right? Let's assume that I bought 1,000 shares, or 100 shares right here. And I held this for 40 cents. That's a $40 move. That's a $40 trade right there, right? But what did it cost me? What would that be? Yeah, that'd be a lot. That's $985, right? No. Guys, I swear to God, don't judge me. Yeah, it is $985. See, I'm not an idiot, but I wasn't sure. So, anyways, yeah, that's $1,000 you're essentially spending to make that 40. Whereas over here, you might be able to make it with just $100, right? So the bang for your buck is significantly higher, but the downside risk is obviously that's where you have to be very fast when you're scalping options about cutting losers. Now, if if you are interested in getting better about definitively cutting losers, then scalping options and full accounting Tesla are like the two ways to do it. Because boy, I swear to God, you'll be out of those things fast as hell because they turn against you really quickly. So yeah, price would dip down here. I would watch this chain because obviously this does not relate to this exactly. So what you would do is kind of draw your own assessment. Let's say that up here the $10 contract was worth $1, was worth 100 right here, 100. And as it came down here, it was worth 60. I would then assess its value and what is this price gap worth based on what I'm seeing here. So it does take a little bit of getting used to. Obviously, the information doesn't relate exactly to what the chart's telling you, but they do play hand in hand. So you can make some really good returns doing options without having to forfeit as much capital, without having to wait nearly as long. But don't think that like, oh my God, this is the way to do it. He's just made me rich, because no, they're still really difficult. The upside is obviously real significant comparatively, but so is the downside. I can't stress that enough. Like, you can lose $700 even though you only had $2,000 settled cash that day, just as easily, right? So you need to still be very mindful, have very definitive rules. And either practice with one contract at a time first, since you can't really make use of on demand or anything like that. So that is my options scalping strategy. Maybe it's something you might be interested in looking at, maybe not, but that is up to you guys. I really enjoy it, but I also have a lot of familiarity with options. I traded them quite a bit towards the tail end of last year. So anyways, let's go ahead and jump into my review. I actually didn't make a whole lot of trades today. I've been doing like Atlas Voice lately, or I'm sorry, Momo Voice lately, simply because there hasn't been people doing it. And I was like, well, if nobody's going to do it, I guess I can try to contribute a little bit just to, get rid of all the dead space. If you guys have any like handy tips for using Webull charts, then like be my guest and let your boy know. So at 8:45, FCEL 1022 to 1018. 10. What, bro? Why are my hotkeys not working? Hold on a second. Settings, hotkeys. I'm reopening Webull. I apologize. I want my hotkeys to work. Otherwise, it's going to be a huge pain in the ass. There we go. Dope. All right. Sorry about that. So, yeah. FCEL we're looking at here. Like the ability to zoom in quickly and stuff on Thinkorswim. Thinkorswim's charts are definitely better, IMO. But anyways, 8:45, 10:22 to 10:18, 8:45. So that would be right here. So within this candle here, before this one, we said 10:22 to 10:18. 1022 to 1018. And my stop was probably down here. Profit targets would have been, let's go where my profit target would have been. Probably right here. Right here. Something like that. Okay, so FCEL, this was actually a loser for me. It's a shame because I know that I got stopped out. I can't remember exactly where I had my stop. Had I based my stop off of, man, see, I don't like basing levels off of the 2-minute chart. You know, and obviously this is just a nutty zone. That would be a huge zone. But, you know, had I given myself just a little bit more room as opposed to, you know, the, whatever this is, 5 cents. I should have given myself, you know, maybe a 10-cent minimum or something like that and not been stopped out. Could have taken advantage of this move. But my stop was a bit higher than that. I think it was at the low of yeah, I'm almost positive. It was right here at this, what I would consider this pre-market support level. And so price came to fill me in full. Well, you know, I'm doing options, but we're going to talk about it just like it was, you know, normal shares. So price came in and filled me on all my bids. And, you know, and it fell out and, you know, came down here. You know, it went up for a little bit. I could have actually taken profit up here, but I mean, you keep in mind this is 1018 to I mean, it's an 8-cent gain or whatever. Not what I was really holding for. It did end up coming and stopping me out, and I respected my stop because I have the rule where you cannot trade a ticker you've lost on for a minimum of 20 minutes. I didn't take advantage of, you know, this area right here. Price came up, filled my zone again, and then it ran to high day. So this could have been a great trade right here. If I would have just gotten into it, you know, like down here instead, that would have been incredible. I could have taken that, could have risked 6 cents or so, kept that same risk. Could have probably actually made the risk right here since I know that this would be the low of the trend. But you know, my rule is my rule for a reason. It's rare that the move that I got wrong, that immediately hopping back in, makes it right. But in this case, it would have netted you at least a 20-cent move. So if you held to all the way up here, of course, you know, it's a 40-cent move or whatever. But you know, I never would have. I would have scaled. So yeah, that was my first trade of the day. It was a loss. Plug was the next one. Here. And this one was at $8.55 here. So that would be right in this range here. I said 31.12 to 31. So you can see that plug did end up eventually filling me. I was anticipating for this to fill me here. Now you could have actually had a pretty bitchin' trade if you used top of pre-market. So like, let's look. You could have used these pre-market levels, 31.18. But I didn't like how little range that gave me, right? We could have done, you know, that's an 8-cent zone on what is a $32 ticker. So I was hesitant about that. I was like, you know what? Forget it. I'll just give myself a little bit more room and we'll do, you know, 12 cents at the very least. And my zone ended up being, it ended up being all right. I did end up getting filled, as you can see here. My stop loss was this level right here. My profit target was, And I was going over this one in chat as it was happening. In the voice, rather. I was holding for 31.43, and I took off, the majority of my position here. It came up to test 31.5. My next PT was actually, I believe, 31, this up here. But, it broke through this level for a nice 40-cent move or so. It started to show a little bit of inaction. Usually when price breaks through VWAP and the 20 and it's going up or whatever, you would like to see, especially on the 10-minute, this is a good example. You don't want to see this move right this move right here, right? Because on the 10-minute chart here, you can see that it came all the way up and then it gave all its body back. So you might as well ignore this wick and continue with the fact that this is a downtrend, because the majority of people buying and selling here saw price come up and said, oh, I would like to sell it at this price, and it came all the way back down. So of course on the 2-minute chart we take advantage of that move. We scaled in, we got tapped in on our zone, we took our profit up here, and but it quickly decided it wanted to sell off. And the good indication of that is to see that this 5-minute candle is the same, pretty much engulfed the entirety of this one. So you should have cut it as it turned around long before it came back to your zone, simply based off this action. And in the 10-minute chart, so great move up, great signs. And then this up here, once you see this tuckering out at key levels, I said okay, at 3.5 I ended up selling on a pop. And let me see, I said great bounce, let's ride. I want to see. I think I specified where I sold, so I'm going to scroll down. Oh yeah, 31.6. I'll scale the rest. And it did. It eventually came up to 31.6, right around that area. I actually ended up seeing this action here, sold at 31. I think I ended up getting filled at 31.5, 31.53, something like that. So I could have milked it for a few more cents, but I'm glad I cut it. If I hadn't have cut it up here, let's say that I had sold half and I moved my stop to break even, which is what I typically do. Now, and I saw this start to come against me. As soon as it broke back below where I sold my first half, especially when it goes like this, I sell the rest. Because I don't need to wait for this move to come all the way down here to stop me out. When I see action like this, I'll take the whatever 10 cents, 5 cents that might still be in the money, because it's obvious that the move is turning against me. I don't need for it to come down here and stop me out, because let's say it comes back down here and goes all the way back up again. I could have had a new entry, a new trade, new assessment with a much better average, or whatever, and I could have sold while I was still in the profit as opposed to holding through all of that pain for no reason. So yeah, I did scale out there. Had I not scaled out my second half up here, as soon as it broke back below this first profit target, I would have just market sold the rest or sell on the bid or whatever you can do just to get rid of your position as quickly as possible. Might have gotten filled down here at VWAP or whatever, but so be it. That's a good way to protect yourself. You could have also potentially moved your stop loss up higher. Kind of create a manual trailing stop. That's something you can do as well to kind of protect yourself from this style of action. Good trade, just unfortunate that, this 10-minute candle, by the time you saw this and you were like, oh yeah, this is bad, you're already down here. This 10-minute candle consists of, this action, a little bit of this action, and these are this candle. So if you were quick enough to identify this 10-minute candle, you probably could have got out before it really went against you. But hopefully you sold like I did, and you sold on that pop, and you took your profit, 31.5 or so, for a good 50 cents. Oh, let's see. Taking a chance on BlackBerry. I did take a chance on BlackBerry, and I got spanked. Got spanked. Where was it? Where was it? It was like an ascending triangle, I want to say. Let's get rid of all this. Taking a chance is at 10.13, so it would be 11.13. Oh, yeah, here it is. So we draw a trend line. Yeah, this ascending triangles are one of my absolute favorite patterns. I'm not a huge pattern trader, but ascending triangles and bull flags are probably like my favorite. Just because something always happens, right? It's either good or bad, and like at least I can count on something taking place, right? So, anyways, as price came down right here to VWAP or below VWAP, I ended up getting filled. I can't remember exactly. You know, this is a little different than my zone plays. I was playing a pattern specifically. But I added kind of in this range here at the support of, this trend line support that I had drawn. And the price actually bounced up here to this 11.5, broke their VWAP. Once it saw this and it met right here, I actually didn't sell. I was up 25 cents. And I was like, dude, I'm gonna hold because if it does break this, it's gonna rally because this is a clear ascending triangle, and this break here, as soon as price peaks over that level, people are gonna see that and they're gonna buy, and it's gonna peak over and then. So I was holding for the break, ready to sell very quickly on that pop. I did have options, so they would have increased in premium really, really quickly, and I could have taken advantage of that quick move. But instead, it broke back down. I ended up holding it. My options were actually were red, even though they were starting to test this level here. As soon as it broke through this support, I did a market sell on my options. I ended up losing a little bit of money. Nothing significant, though. But this is a good example of, like, sometimes, like, I had an entry down here at 11.25, but my options were already in the red, even though we were above my entry at 11.31 or so, simply because the buyers and the sellers anticipated a move to the downside, so that was priced into the option chain. That does happen, right? So that's why you cannot hold them. You cannot hold them. If you want to buy back in, you think that like you were right, sell them and then buy them back in at a discount. Once the move is established or something. Do not hold your options and hope for it to turn around, bro. I do not like that at all. When you're scalping options, you cannot hold them longer. They will burn you up. So yeah, I cut my loss as soon as this support broke. Ended up taking a small loss. It's close to where I got in, was where I sold. You can see, but I still did lose a little bit, so that's okay. Yeah, I did end up posting this picture, watching BlackBerry for the break of the ascending triangle. And then my final trade of the day, which paid for my entire day by itself, was LED. Oh, dope. The stuff is still on here. So I posted this in Discord. I said I like this. I was pretty cryptic about it because I was, at work. This happened at 1:25. Would have been 2:25 my time, right? Or no, 12:25. 12:25 my time. So I assessed this zone. What did I assess this zone based off of? It's pretty easy to tell. I assessed my zone based off the bodies of these candles from previous, the body of this candle. You come over here on the 5, and that's a little bit more clear. You even get the wick of this recent candle, corroborating that body, wick, body, top areas here. So that's how my zone was based. I chose it off that. Keep in mind that, this is the low of this trend rally. So I assessed a zone based on levels that would make it a higher low if it did get filled. Now, I don't want to make a zone that keeps me in line with this. Otherwise, that trend could be, no longer trending up without higher lows. So I made my zone here. As you can see, it came down to fill me beautifully. And then almost immediate, and I preach this all the time. So this dotted line right here is my stop loss. This is my ad zone. This is my profit target. This is my profit target. I preach this all the time. Anytime you see a wick fill on the 5 or the 10 to fill your zone, that's a really great sign, because it means that price is bullish and that you're already in the green. So when it comes down and taps you in and then goes right back up, that means that you, as well as many other buyers, had the same idea of, okay, this is a good price to buy this at. This is a price where I can benefit and make money off of the value. And other people thought the exact same thing, which is why the dip gets chewed up really, really quickly. So up here, it does break up to the 20. On the 5 and the 10, you can see that the 5 you're pretty much riding trend line support like almost perfectly, dude. Like this 20, look how it reacted to it. Boom, 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 boom. The 20 pretty much kept price afloat. And then as soon as it broke through the 20, it started its sell-off for the day. Look at that. That's the trend reversal. As soon as it broke the 20 on the 5, well, I guess on the 2 as well, but as soon as it broke the 20 on the 5, trend reversal. It's selling off for the rest of the day. Respect, respect, respect. Break, bearish for the rest of the day. So a beautiful move. Regardless, I got in here, at a great cost average, 14.5. I want to say 14.55. I think actually. Immediately I'm hitting my first profit target for like an 80-cent move. Something. I mean, that's a crazy valuable move right there. 80-cent move for a 40-cent downside. So it's a 2-to-1 risk to reward at my first PT, and we got there quickly. Price actually, the ticker never came back below where our entry was, which is a very strong move. Now, if I was at home and above PDT, not trading options, I would definitely use this example here as a prime example of adding to winners in hotter markets to really, really take advantage of huge moves. A lot of traders make their entire year in like 3 to 4 months. And then the other months of the year, you just, making a little bit, losing a little bit, staying sharp, continuing to learn and grow. But your cash months, where you make the most, is actually like a smaller majority or a smaller minority of the year, when the markets are just crazy hot and you can really, really take advantage of striking while it's hot to push those winners. So I actually did an analogy when somebody asked me, how do I extend scalps or benefit more, or make more money per scalp in hotter markets? And I said that when I'm in a hot market and we can say, this is a good market, we're in a really good spot right now, which things are getting better. I don't know if we're there quite yet for me to definitively sing to the heavens that like, hooray, pennies are back. But we are really trending in the right direction. No pun intended. And I use this analogy and when somebody asked me this question, I said it over voice. Let's say that you're playing Texas Hold'em, and you have 2 cards in your hand, and 3 cards get turned over in the community cards in front of you, and you see the 3 cards and the 2 cards in your hand, and you're not sure. You're gonna stay in the hand, but there's some potential here. You're not sure. You don't have a definitive. I have a 3 of a kind or a flush or anything like that. You got some decent cards. Just like a trade, you got a decent entry. You got a decent plan. So you're going to want to see where this takes you, right? You want to see what happens. Well, the next card comes out. It's turned over. There's 4 community cards. And you're like, okay, this is still looking good. I'm not ready to go all in because, I still don't definitively have, what I would consider a really hard to beat hand right now. But let's say the 5th card gets turned over and you realize you have, a very high priority hand strength. Let's say that you have a flush or a straight flush or a royal flush, right? At that point, when you're looking at that and they say, okay, would you like to bet? You can bet your sweet booty that seeing that I have a straight flush in my hand all of a sudden with that fifth card, I'm going to say, yes, I would like to make this bet worth as much as it possibly can be worth, because I have in my hand, and it has now been confirmed that I have an amazing winning hand. This is a winning hand I have. So yes, I am willing to put everything I got on it because it's going in the right direction and I am confident in this winning hand. So, my point is, the analogy is that, you don't put everything you got on a hand that you're not sure of. But once the hand proves to you, this is a winning hand, that's when it's time to ante up. That's when it's time to see how much money you can make that winning hand worth. Once you see in your hands that, oh shit, this is a royal flush, you want that royal flush to win you as much as it can. You want to squeeze every bit of winning out of that hand, because you're like, yes, this is proven to me. This is confirmation that this is a winning hand. My chances of winning are very, very good. So at that point, you load the boat. That's kind of how I think about scalping in hot markets. So right here, I have a hand where I'm like, it's a good hand. I like my plan. The cards are getting turned over. The plan's starting to work. Okay, yeah, sure. I'm not 100% positive that this is a god tier hand, a god tier trade yet. But then the fifth card gets turned over and it breaks through a profit target, or you see something really decisive like, this candle right here and then this eruption, respective key levels, respective key indicators, something like that, right? So let's say I took this entry, I got up here, the market's super hot. I see it now making base on my initial profit target. I'm going to add back what I got rid of right there and make my stop like, right below here or something, so that if it does turn against me, I still make bank. But I'm going to start, squeeze. If my entry is here and I add back right here, it'll move my cost average up, to here or something like that. Sure, fine. Set a break to stop, or stop to break even, or whatever. Just kind of like the free play. If you haven't seen that video, go check it out. And then you sell up here. You can add back in, or you can just, instead of scaling out, double your size. That way, when this move does break to up here, 1623, you're in twice as heavy because you said, this is a winning hand. Look at this move. Look at this beautiful chart that tells me like this level, this 20 on the 5 is being respected and it's pushing price up with it. You can tell on the 2-minute chart that price is popping really strong. So as soon as it pops up over this, you can double your size. Instead of removing half, add half or add twice as much. And that way, instead of 1,000 shares, you have 2,000 shares. So when it does pop through your second profit target, boom, you're making twice as much money on that trade. Or you sell half and you add back on a dip. You sell half again, and then whatever you have left, you put your stop to break even, and you have a free trade. There's a lot of really good ways to extend scalps. And primarily averaging up and adding to your winner is a way to do that. Now, it's not uncommon where I'll start with 1,000 share position, and by the time I'm at the end of the move, I got 6,000 shares, right? And I make my entire week on a single trade. Now, if it comes against me after I've loaded the boat like that, I'll cut it for a small win or break even or something, right? And just protect my downside. Sure. But once I am given confirmation that I have a winning hand, once I see that fifth card turned over and my mind goes, oh, dude, this is a royal flush, I'm throwing every chip I have on that table and saying, all right, if it goes up, I'm rich. If it comes down, I lose nothing, or I only make a little. Like, the upside in those situations is significant. Had you loaded the boat and taken advantage of this, let's say you started with 1,000 shares and you're up, $1,000 almost at this point. You're up over $1,000. Had you doubled your size here, you'd be up $2,000. Had you doubled your size here, you'd be up multiple thousands of bucks. You see what I'm saying? Like, adding to your winner, you cannot be scared to average up. People are afraid to average up, right? Because they're like, oh no, it's gonna hurt my cost basis. But you have to think of it in that poker sense, where I've been told right now I'm in a winning trade. This is a winning trade. This is a winning hand. I've been given confirmation based on all of this information that I'm being given. I've been given confirmation that this is a winning hand. The 5th card has been turned over, and I have a royal flush. So I'm going to add everything I can because I want to make the most money possible out of this hand that I've just been told is a winning hand. This trade that I've gotten confirmation that this is a winning trade. My plan worked exactly how I anticipated. It hit my profit targets exactly how I anticipated. This is a winning trade. So what do? Do I sell and accept this winning trade for what it is? Well, in slow markets, yeah, that's the plan. But in a hot market, you say, I was right, and now I've got confirmation that I was right. Here's everything I got. You don't have to whole account it or whatever, but yeah, add some more size, double your size, add half of your position on top of it, something to that effect. And, when this move does pop like this, you make your whole week in a single trade, in a single scalp. That's why I laugh when people say, scalpers, they pinch pennies. I'm kind of a hybrid scalper. I don't buy 10,000 shares and sell it for a 3-cent gain or anything like that. I kind of have a mixture of momentum and scalping. But, don't listen to people who say that, 40 cents. Oh, yeah, 40 cents. Great job. You know what I mean? I love my homies, and, Rodessa and Trog and all, and Bear, they always give me grief, and it's all in good fun. But you can make if you took this trade right here and you added to your winner at this first profit target and added to your winner at the second profit target, or added to your winner at the first and sold all at the second, I mean, that's a huge trade. That's a huge trade that never, ever, at any point, ever went against you. Because your entry was here and price never even came back to that. So why wouldn't you average up? Why would you be afraid to add? If I told you, hey, if I leaned over your shoulder and said, hey, guess what? I just looked at everybody else's cards and you have the best hand. You have a really good hand right now. Would you say, okay, cool, thanks. Yep, I'll take my wins at that. Not a chance. You have to change that mentality of being like, yeah, I'll take it. That's a win. You have to change that mentality and say, wait, that guy just told me I'm going to win. Probably, more than likely. So, yeah, all in. Because I would like everybody else to go all in, knowing that I will take that money and turn this small win into a huge win. Well, why do we not do that with trading? Well, fear mostly. Fear of turning a winning trade into a losing trade. Fear of seeing your P&L, say, up $500 and closing it out of that trade with only up $200. But that's the cost of doing business. That's how trading works, right? So my advice, don't have your P&L on your screen. It's useless. It does you no good. If you need it for some other... I used to justify, like, well, it helps me know that, like, okay, this is a good point to sell, or yeah, but that's bullshit. Just get rid of your P&L. Trade the chart. Because your P&L is going to do things to you. Like, let's say I'm red $200 on the day and I make $200. My mind says, okay, sell. You've made up your money back. Hurry up and sell and lock that in. It screams at me. Okay, you're breaking, and instead of letting the trade happen and making either more, potentially, not making that much, having it come against me and then selling. My brain wants to recoup what I've already lost or take what's guaranteed. You know what I mean? And I have to turn that off. I have to do my best to say, no. Why would I do that? I have a winning hand. I have a royal flush. So I'm going to go all in on this trade. And if it comes against me, yeah, I end up not winning. I end up getting stopped out for a very small loss or break even or only a little bit of gains. That's the cost of doing business, because, even if 50% of the time you take it for 5, 6, 10 times the gains, you'll have a very long and successful career in trading if you can manage to do that. So that's going to be it for me today. This has gone on way longer for the amount of trades I took. Hopefully all of this is helpful. Obviously, the option stuff is convoluted, a little complex. If you have any questions about any of it, feel free to hit me up. I will be available, on my phone or whatever, Discord. My DMs are always open. I'm happy to answer any kind of questions you guys got. So please reach out if you need to, and otherwise enjoy your weekend. It is a long weekend. It's a 3-day weekend. The market is closed on Monday. Monday will probably be the only day I ever show up to Chuck E. Cheese on time because I do work on Monday, and I have no reason to be late. But yeah, so enjoy your 3-day weekend, guys. Have a good one. Steady up. Do what you got to do, and I will see you on Tuesday for hopefully a really amazing start to the next month. And another step closer to all of us getting to where we want to be. So be well, guys.